Hello fellow intelligent investors, my name is René Zellman, and in today's video I want to continue to highlight the power of a stock screener. In the first video of this two-part video series, I have shown you how the screener provided by the TIKR research platform works. I essentially covered the basics. Now in this video I want to go one step further and show you how you can use this tool to find the highest quality businesses out there that you might then want to invest in. So what I will do is I will share a very specific set of criteria that you can then use right away, starting today, to screen for some of the best companies in the world. So without further ado, let's get started.
Have you ever wondered how you can make your hard-earned money work for you? Have you ever dreamed of building generational wealth and leaving a legacy? My name is René Zellman, and I'll teach you how you can manage and invest your money with confidence, a long-term vision, and without losing your mind. Join me on my journey of intelligent investing and learn how smart people can compound their money effectively and accumulate wealth.
Alright, as I said in the introduction, in my last video I introduced you to the TIKR Global Stock Screener. The second aspect I want to do now is to show you which specific filters you want to use if you are screening or when you are screening for the highest quality companies. So here's what we are going to do. We are going to build a high quality stock screener together today from scratch, a screener for so-called compounder stocks. According to a Morgan Stanley report, those are companies that can consistently compound shareholder wealth at a superior rate over the long term, while offering relative downside protection. So let me show you how you can find these compounder companies, and let's jump right into the TIKR tool itself.
Alright, so we would just click on Add Screen and then name this preset Compounder Screen 1. I'll call it 1 because obviously the nice thing about these screeners and the preset option is that you can build multiple screens that filter the stock universe for different things. And once we have done that, the first thing I would do is screen for high double-digit revenue growth. So I would first add a new condition by clicking on the plus sign and then head to the income statement. And there I would choose total revenues. And once I have done that, I would click on TIKR as I'm looking for companies that can grow at high rates for a sustained period of time and not just grow very quickly in a single year. In a way, a firm growing at high above average rates for a prolonged period of time, say 10 years or more, may actually already be a hint at the existence of a moat, so a competitive advantage. So let's go for a compounded growth rate of 20% over the course of the last 5 years. So one thing I wanted to point out here is that when you choose the fiscal years, you might want to opt for 2020 as the end year and not 2021. When I first used the screener provided by TIKR, I used 2021 and I was actually surprised because the number of matches the screener gave me was lower than I expected. So I can show it to you right here. If I choose 2021, the number of stocks that pass my screening filter will be much smaller than when I choose 2020. So at first I was confused, but the TIKR team was kind enough to immediately get back to me and point out that the issue was that many companies have not reported their 2021 fiscal year numbers. And so the screen cannot find them, even though they might have grown their revenues north of 20% over the course of the last 4 or 5 fiscal years. So if you just select the previous fiscal year as the endpoint, so in this case 2020, you will likely have many more companies pop up in the section below your screening conditions. Alright, let's move on. Besides revenue growth, I want to include some kind of cash metric. So let's add another condition and head to the cash flow statement. And here we are going to select levered free cash flow. And again, a CAGR of more than 20%. Okay, if you just click on Fetch Screen now, we can see that these two conditions alone already bring down our list of stocks to 1,695, which admittedly is still quite a lot. Okay, so maybe we should add another condition here. I would like to add some kind of margin metric. So the two metrics that TIKR offers and that I might want to incorporate in my screening presets are a gross profit filter or an operating profit filter, or as it is called here in TIKR, EBIT margin. And these margins show how much of each dollar collected by a company as revenue translates into either gross profit or operating profit. And for the sake of this example here, let's just go for gross profit margin. And maybe let me just explain why the gross profit margin might be relevant when we are searching for superior business models. Well, the gross margin reflects the accumulated total expense incurred by labor, raw materials, and manufacturing overhead to create a product or this service. So this metric shows how efficiently a firm is using its materials and labor in the production process. And not only does the gross margin reveal how efficient and maybe how capital intensive a company is, no, it might also be a hint at a competitive advantage. In their book Quality Investing, Owning the Best Companies for the Long Term, the authors wrote the following: gross profit margin demonstrates competitive advantage. It is the purest expression of customer valuation of a product, clearly implying the premium buyers assign to a seller for having fashioned raw material into a finished item and branding it. So you could just look up what the gross margins of some of the world's premium brands look like. For instance, Louis Vuitton Moët Hennessy has a gross margin of 65%. Capri Holdings, which is the holding company of Versace and Michael Kors, is at 60%. Or we could consider some very capital-light business models like MasterCard, which is at 78%, or the online handmade products marketplace Etsy, 66%. So back to TIKR. Let's look for gross profit margin. Then we choose the absolute value option here, last 12 months, and we go for a gross profit margin greater than, let's say, 50%, which is already pretty strong. If we go to the NYU database, I can show you what the average gross profit margin looks like for various industries. So by choosing 50%, we are definitely screening for high quality companies. Alright guys, we are almost done. Next, we want to add another profitability ratio, some kind of return metric. And I will go for return on equity here, and I would choose an ROE that is above 15%. And then one last criterion that you might want to add to your filter is a debt ratio. But as I said, I want to keep this video fairly short, so I would say we need to look at the debt situation of a firm anyway once we do the subsequent deeper analysis. But one more filter that I want to add here, and maybe to showcase the power of TIKR, is a geographic filter. Because maybe you are only familiar with, say, Northern American companies. Obviously, being US based is not a necessary condition for being a superior business, a business of superior quality. But if you live in the Western world, you might have an easier time understanding these firms that offer products that you might actually consume. And then finally, I would like to add two more aspects that I don't want to include in the filtering process itself, but nonetheless I want TIKR to display these metrics. And that's, first of all, a valuation ratio, like for example, enterprise value to operating income. And then a second metric that I would like to be displayed but not included in my filtering process is the market cap of the company. And now we only need to click on Fetch Data again, and voila, as you can see, TIKR comes up with the final list of 55 probably high quality companies.
Okay, you would now have to follow Buffett's advice and start with the A's and go through the list that you have come up with one by one and do a snap judgment test to see if you want to dig deeper. And if you don't know what I mean by snap judgment test, make sure to watch the following video that I have made in the past. If a firm passes your snap judgment test, then you can do an actual deep dive on the company. Start reading the annual report, look at a conference call transcripts, look up write-ups, and so on and so forth. Okay, keep in mind that this is actually only the first iteration of the global stock screener, and the TIKR team will likely update and improve it in the future as feedback comes in. Two things I would like to see in the future or in future updates are a filter for insider ownership data. I think this should be doable as TIKR has the data available. And I would also like to see a total debt to free cash flow metric to choose to evaluate the debt situation of companies. Now, what I would like to know is whether you have used a screener before. And if that method is new to you, please let me know in the comments down below what you think of it. If, on the other hand, you have used a screener before, please share in the comments which criteria you are actually screening for. Alright, and obviously if you have found this two-part video series useful, I would obviously also appreciate it if you would just very quickly hit the like button down below. And as always, may your finances and investments prosper. I see you in my next videos. Good luck.